So what size of the market do you control in Nigeria at the moment?
About 65%.
65%?
That's right.
Okay. Are you driving, therefore, towards a monopoly?
There's a lot of competition out there, and there's very good competition out there. So I don't think we will manage to get there. It might be our wish. I don't think we will.
60%? That's huge. That's huge.
What we want to do is make sure that Nigeria has enough good quality cement, and not only Nigeria. That's the business model we're using everywhere. And you see, wherever we come, we have managed to deliver good quality cement at a good price and deliver it at a place where it was not serviced in the past. So I think what we're doing is, fulfilling where we see a market lacuna, where we say this is a market we can fulfill, and we're willing and prepared to fulfill that.
You're a multi-billion-dollar enterprise. So the word on the street is that this is a company that has the ears of the government and perhaps that of the central bank when it comes to the foreign exchange market. Do you get any preferential foreign exchange receipts from the central bank?
I wish I got. It's been, especially since June when the devaluation happened, a very large struggle for us to get US dollars. And actually we are like every other company in Nigeria. We are coming by, but actually our US dollar debt is slowly creeping up on a monthly basis. So we still have the pain, and the pain is not over. And to be very blank about your answer, no, we do not get a preferential treatment. I wish we got.
In terms of a competition, do you think this is something very strong for you?
In what sense?
In the overall cement market.
So no, the Nigerian cement market is actually very competitive, and you started by saying the price could go up and the price could go down. So we are very actively competing with our peers in the industry, and I expect that to remain.
Let's step outside a little bit and look at you've sort of capped your investments across a number of African markets where you currently operate. Do you think you've expanded in a number of countries enough? Are you consolidating at the moment? And what's the returns from these markets where you operate? Zambia, Tanzania, Ethiopia? Well,
to start with the returns, the good thing is, we just mentioned we do a lot to avoid or to alleviate the pain from the foreign exchange. One is exports, one of it is local production, and luckily for us, actually the foreign subsidiaries are now able to repay part of the investment loans we have given to them. So part of our need for foreign currency is actually fulfilled by our foreign subsidiaries. So in that sense, the first fruits are coming back to Nigeria from those investments for us.
Where are the front lines?
Which
countries are the front lines?
So we do that from the countries who came on stream the first. So they are now capable, because if you start up a plant in the beginning, you have some startup losses, and you will work your way through the first 6-9 months, and then once you're a year or 1.5 years in operation. So it's typically the operations like Senegal was the first one where we can start to repatriate some. That was the first one outside South Africa, together with South Africa, where we started, so we can repatriate some cash from.
Yep. I'm still interested in the global or in the Pan-African markets where you operate. A bit of some challenges in a few countries, in Zambia, in Ethiopia. Have you been able to resolve these issues with the local authorities and the local people?
Well, it is in a way business as usual. You can expect if you start up, you're new in a country, you have to find your way. I think the problems we have are typical for Africa, typical for the countries we are in. So like in Zambia, I think we are doing well. Actually, that is one of the countries where we start to stabilize, see some profitability margins improving. We are able to repatriate some of the cash from Zambia. So actually, we're doing pretty well in the other African countries. I think it doesn't show so much in our results because all the African countries are shown together, and that means that the countries who are operating for 2 years are mixed with the one who are just starting up. So the profitability is an average. The reality is that a lot of the countries which are, and I have discussed, and probably what we're going to do is disclose as well for the companies which are in operations for, say, at least a year, we're going to show separate profit numbers because they're good.
You had a conference call with analysts about a couple of days ago. What did you tell them as far as the outlook for Dangote Cement is concerned?
I think we have proven that in 2016, which was a very difficult year in all respects, and all Nigerians know that 2016 was a difficult year, that we could still hold our own, we could grow the business. Yes, on profitability we didn't grow so much, but that is, we are happy that we could maintain our own. By increasing our dividend, we give a sign of confidence that we believe in the future. We are very positive that maybe demand will not grow so fast as we would like to see it, but there's a bright future ahead, and it only gets stronger when you have the headwinds like we have had in the last year.
Give me some numbers to chew for 2017.
Yeah. Well, clearly the good news is that we have Tanzania, which was in operations only half of the time last year because we started in about end of June. So Tanzania will be operational for the full year, which so it could double the volume we can get from Tanzania. In January we have started Sierra Leone, so that is now contributing to the volume and the revenue growth. And we will have Congo starting in the next 4 weeks' time. So we have at least 3 new countries which will add to the top line and hopefully also a little bit to the bottom line. Then if you look at all the other countries, I don't expect that they will grow so much because most of the other countries are now in business for 12 months or 16 months. So growth is not so much our objective for next year. What we want to do and show is that we now can not only grow top line but also grow bottom line. We want to be more profitable next year.
Okay, so I'm looking at the bottom line. Give me a figure, an estimate for 2017, a bottom line.
I leave that to the analysts. They are much better in predicting than I am.
You're the one making the cement. You're the one making the cement.
Yeah. So. I have a major shareholder, and he says, if you don't double it, what can I do? That's a little bit of a joke. That's an expectation. I don't think that is what somebody expects, but we're ambitious.
Midterm, short to midterm, you're looking at growing around from this about 2.7% to say 5%. Is that?
I don't like to predict the future. What I would like to do is close the quarter by quarter as quickly as possible. It's now March already. In 4 or 5 weeks, I have the first quarter results. Have a look at those.
That's true. That's true. Okay, let's just wait a little bit, a few more weeks, and then your first quarter numbers will be out. Thank you for coming. Onne van der, who is the Group Managing Director and Chief Executive Officer at Dangote Cement PLC. Let's take a break. When we return, we're looking at the $1 billion Eurobond listing today on FMDQ OTC Securities Exchange. We heard a little bit from the FMDQ side yesterday. Let's hear what the debt office have to say about this historic listing. We'll be back in 2.